Hello, everyone. Happy Friday. How is everyone doing? Sorry, I'm a bit under the weather. I'm dealing with a migraine today. It's storming here, too. Rare rain event in Arizona. Hope everyone, though, is having a wonderful day so far. Good morning, Patrick. Good morning, McRangers. Good morning, Sterling. Thank you for putting in all the news and the unemployment information and more. I'm going to scan through that. It's going to probably be a shorter live stream today. Uh, I don't know if I agree with that, but it doesn't matter if I agree with it or not. Does it? No, it doesn't. So let's see who else is here. Good morning, Daniel. Good morning, Bull Strike Cheetah. Yeah, no Trump put. Besson, there's no Trump put, but there's a Trump call upside. Is it maybe selling covered calls? Good morning, Ted. Oh boy. Good morning, Jacob. Thanks for putting in the earnings. Also, Sterling. Good morning, Richard. Morning, Mike. Paper traded VIX call options around 15 and up a couple hundred on the April contract. What targets would you use to close the position? It depends what pattern. Again, I trade patterns on the VIX and key levels. So also, if you're up on it, watch for any short term, like a shorter term chart reversal pattern. Broadcom was a beat yesterday. I didn't think their guidance was that well. Again, this would have been traded when they released earnings, but so it couldn't wait for a close. But there was a double bottom that set up on there, and it went through all the targets and now dropping back. What's that? Good morning, Royal Palms. Remind me in a bit, Royal Palms. Good morning, John. Is the desert blooming? This is the first rain, boy, since a while, since like October. So, and that was only one day of rain. So, I mean, it's perking up, but we'll see what happens next week with this rain. Good morning, because it's just one day. Good morning, David. Yeah, I do take I take Excedrin migraine. I've tried other medication for it, and it just does not work well with my body. So, hey, thanks, Chris. All right, so we'll get through this. And again, if you're feeling under the weather too, like I am today, you don't need to trade. At least intraday. You can, if you need to adjust something on a longer term stop or target, fine. But you know what? Don't force anything. Especially don't force anything this Friday based off we've been down all week. The market's been running out of momentum to the downside. The non-farm payrolls, uh, everybody's celebrating 151 because consensus was one, so it wasn't as bad. Last was, remember, 125. This was a bounce up, still below consensus. You know, slight tick up in unemployment rate, but nothing critical. Hourly earnings dropping a bit, but in line with consensus. Year over year dropping a bit, but up from prior. Participation rate ticking down a bit. Average weekly hours holding steady, but missing consensus. It was a pretty mixed to missing unemployment report, but people are celebrating that wasn't as bad as expected. U6 unemployment rate ticking up to 8%. And what else we got? We got Powell speaking. Remember, that's the big thing today. Powell speaking. And what guidance he gives at 12:30 Eastern time. So do not be asleep. Do not be having a big lunch if you're trading intraday. All right, around then. And on top of that, you got Bowman, Williams, Kugler, and Kugler's bookending Powell. And then there's not much. By the way, just a preview for Monday is not much consumer inflation expectations. So far, you have your chips. Let me just do a quick refresh of this. We have the chips based off Broadcom. Again, I just think it was a buy with, all right, they did beat. Again, the revenue number was good. But their forward guidance on revenue number isn't that different. So I don't know if it warrants 10%, but you know what? That's what the market is, and NVIDIA is bouncing in unison. Costco missed on a EPS, beat on revenue, missed on EPS. But again, remember, their valuations on Costco are insane. I'm surprised it's only down 2.7%. Your groups, energy leading, there's a little mini Double bottom in crude, technology, utilities, consumer defensive, getting sold off this morning. Fed watch, as Sterling put in, has the first cut in June, and then another cut in July, then another cut in October. So still pricing in 3 cuts this year. Fear and greed, still an extreme fear. It's why I'm keeping an eye on a bounce. Just keep an eye on the stock price breadth is also deteriorating rapidly again. So it will be interesting to keep an eye on that. Schiller PE is still above 36, even with this pullback. Where still this market is nowhere near cheap. No, it has got to pull back a lot farther in a longer term to get sane valuations. Not to say we won't get insane rallies between those, but longer term, it's still got to drop. See, your Richards cost DEI protest is working because they missed, but they still beat on revenue. So maybe you're still secretly buying stuff there, Richard. Maybe. Maybe you're like at the food court getting a hot dog in between your protest. Just saying. Just saying it could be happening. What else? Yeah, the Futures Edge with Luke Groman. Yep. Oh, ye of little faith. I know you're at that food court. You're at the food court. Don't lie to me, Richard. All right. All kidding aside, so you get the pop here. It's a lopsided double. These are less reliable. I'm just putting the targets on here. Why? Because the trigger point is virtually the same as my key. The trigger point is just higher than my key significant level up here. So, and then the targets line up nicely with intermediate. Look, the second target is right in the middle of the clear path move and spike these 2 spike highs. The first target. Oh boy, it's a rough morning. First target at the 2 spike highs, second target at the next significant level, and the final target just in front of the final significant level. So that's why I'm keeping an eye on that. Has it triggered or confirmed yet? No, it has not. Okay, so this would need the 2 levels I'm watching the upside besides any minor patterns. Any minor bounce going in the open, keep an eye on 57, 52. The key area it's got to sustain above in order to trigger the double. First key area is 57.79 to 57.80, and the trigger for the double is officially above 57.86.50. The target's 58.19. 58.35, and then 58.53 to 58.55 is major resistance. Also notice you're still against the 4-hour rotation zone, which has held up the last couple days, so really pay attention on any spike. Even if this does trigger, pay attention to 5,800. That's the top of the rotation zone. Again, you don't have a lot of clear paths. You have a lot of stopping points in here. So any rally still getting sold, but I want to see what happens after the cash open. NASDAQ, again, we'll just put this on here to see. Almost back to that other significant level right there. Your spikes were just above the second target, and your first target is just above the candle bodies. And if we look at this, let's just take a look at the retracements, because this is exactly what I set stuff up for. So I'd probably keep my second target just a little lower at that 62.5 area. But that's the kind of thing I'm looking for intraday, even though I won't be doing anything on the intraday basis. Now, I forgot the downside on the S&P. If we break down, right now we're at the 25% extension for the double, which is just a key harmonic. All right, see if we do this. If we do this from this prior high to the low, and then we just go to harmonics, that's what this other little line you see, that lighter line in there. So we're at that key harmonic level, which is not the key from the double, but that's a key from a harmonic extension area. So keep an eye if we do form this little double in here and get a bounce. Remember, Remember, on the upside, any bounce, look where the final target on that double is, and the second target is to the rotation zone and the 200 and the prior major breakdown zone. Now, if we don't sustain anything today, what takes this little mini sloppy double off the table would be if it does drop below 57.0350. So that's another minor level to keep in mind. NASDAQ, we're going to just do the same thing, the minor level to show. Remember, this is a sloppy double, but based off stair stepping with the RSI, we could at least see some kind of, doesn't have to necessarily trigger today, but we could see some kind of buying after the open of 19,935. I'm watching for two extremes. I'm watching for either some momentum buying or a flush out move and then some momentum buying. 19,935.25 is a key level that would take the potential double off the table for the NASDAQ. All right. And then the next key harmonic to the downside is 19,735. The target's the upside in NASDAQ. Should this trigger above 20,273.75, the key levels, let me zoom in here. The key levels are 20,409, 20,476, and 20,544, 545, right in front of my key significant level. The Dow, there isn't anything here. You see here, there's no double. Why is there no double? Because this is actually a quad bottom. Quad bottom, my girls got them. That's if Queen traded the Dow. If Queen were Dow futures traders, that would be the song. That would have been the song. But against coming into this very key harmonic area, so this is why, yeah, we might get a little dip. If it starts breaking below there, though, the test of mid-January is the key. But anywhere in here, I'm watching for that. Hey, Rich. Can I check Palantir? Yeah, sure. So, again, a lot of these still watching because we're running out of momentum. By the way, on the Dow, keep an eye on this candle high, the little spike high from earlier in the 4-hour rotation zone, because that could signify that we've put in at least a short-term bounce on there. Russell also running out of momentum to the downside, but there's, again, you have a multi-bottom. So it has to start getting above 2077 again, and then the next key level, I'm just going to bump this down a hair to about 2107 is the next key level. VIX, now here's what I'm talking about. This would be a longer term play. Remember, I've been talking about buying volatility for setups for a while. So this is an area I'd definitely be looking to unwind a little volatility, and then I'd still leave something on in case we get a flush out move. But if this double, because you can trade patterns in this. If this double were to trigger, that would be all right. I'm done with my long volatility. I'm now going to wait for a pullback. All right. And within that, let's say we do spike into the open, you might get a little double within a double. So I'd be watching this little pattern. So I'd be paying attention to the possibly if it starts dipping below 24, that's where, again, I might take some more partial profits. Other than that, the trend is still up. That's back to that volatility question. The yield, let's look at the DAX. The DAX, super overextended, but no topping pattern just yet. Stair stepping down in momentum also, but still holding the rotation zone. So nothing, some of these just have nothing to do. The notes, show you this. So it hit on the inverse head and shoulders, hit the first target twice, making a double. The double was triggered on the yields, coming back down, hitting the first stop reduction. All right. So now if this close, so that could have been another area to just unwind the rest of the position. if it does continue lower back to the next target and closes below 4.194, the head and shoulders is off the table. So there you had conflicting patterns set up. Let me just get through these things real quick so I can look at some of these stocks. Dollar index coming into the super key area. I'm watching today if it closes below the 62.5. Then I will watch it for a bounce play because it's very oversold in cycles at the bottom, and then the next rollover play. Crude. It is somewhat of a flagging double. This is a double. This met the criteria of the double, which was triggered in just after European Open times and hit the first target. So that's the only bounce play there is right now. Keep in mind that, see, the second target is still right at the rotation zone. So this is an aggressive play, aggressively moving up stops from my perspective. Now, again, I don't know if that qualifies still. I have to see. It technically still qualifies. So if we broke back below this little base here, then that trade would be over for me. But we have not done that. Let's see. Gold. Coiling for the next move. Coiling up for the next move. You see just this big, sloppy, horizontal channel pattern. Did this officially hit 24.91.5? No, it was 0.3. So we just technically aren't double top territory, but we still favor the move to the upside. What else? What else? What else? Yen also coming back to a very, very, very key area in the 62.5. So going to be paying attention to this to where it closes today. To where it closes today. A lot of these could be setting up for bounce plays next week. And Euro could be setting up for a topping play next week. Now, the Euro will be interesting to see if it closes above the 62.5 or we get some selling into the European close. But the key level is 108.25. Spiders, and I'd be paying attention to those sloppy doubles if they trigger in the futures, even if you want to trade the spiders. The key stuff, slight gap down. So if we do get that rally into the open, 572.71 and then 575.60. With this, there is no great pattern, so I'd be watching it in the futures. By the way, the next key level above 575.60 is 578.30. The Qs, by the way, this is still valid for going into next week. This is still valid for going into next week. If we get some kind of bounce today that follows through next week above 503.62 without invalidating the pattern, you could set up for a bigger bounce in the Qs/NASDAQ potentially, but it is against the strongly declining daily rotation zone. Bitcoin, all over the place right now. But the double bottom is still technically in play. All right. Natty Gas, and then put in your stock requests again, please. Natty Gas is a daily potential mini double top and a much larger petite. Natty Gas, hold on. You do have your potential double top on the daily. That is true. Right there. That is still completely valid. And on the weekly, much larger potential double top, is that still valid on the weekly? Because here's your daily one, and I know that one's still valid. Remember, because unless it trades above 4.605, it's still valid. The weekly one, though, this is not, because it extends above 4.323. So you just have the daily one. The weekly is not there. Keep that in mind, please. I know we wanted Volunteer, the little mini double that we talked about, or I don't know, did I talk about this on? I don't remember if I talked about this on this live stream or something else, but it turned into a triple. So that is off the table right now. This is turned into a triple. Remember, triples slightly favor continuation patterns. So it's not been able to get any traction on this bounce and getting sold into the rotation zone. The only thing, if we get the rotation zone out of the way and it gets above 90.29 on a closing basis, you could see a bigger bounce. Otherwise, this still favors a continued pullback over the medium term. It's not a double. This still favors a pullback. All right, and based off the last run up, you've closed below 62.5, and the magnet price is the 87.5 still in the short term. So I'm not saying it can't get bounces, but this would have, in order for me to do anything from the long side, it would have to get out of the way of this rotation zone because it could not even trigger the double. The next key targets are 71.15 to 72.73. What CRM? Salesforce. Salesforce is sloppy. Sloppy lopsided double, but since it's been in a sell pattern, that'd be the only thing in the 200 area. Let me take off these longer term ones so we can see it better. Again, you're in a key reversal zone. However, if the lows from Tuesday break 282.24, I'd be watching closer to 270.88 for a stronger bottoming pattern unless this little mini sloppy double triggers. It's lopsided, but that's the only thing. And it's against the rotation zone, so you have to be, you have to be more aggressively raising a stop, and the first target becomes in play, and look where your gap fill is too. Other than that, I'd be very patient on Salesforce. Very patient. You might get these little bounces, but still, you're below very key support. Your P to E is still 40, 45.90, not anywhere cheap. The major growth, it topped out with a massive double, remember? Your massive double top, okay? So longer term, you could easily see continued lower prices into this key support area. So the only thing would be that little mini double for a bounce play. Other than that, I'd be watching for rollover plays in CRM. It's nothing I'd be aggressively touching the long side. NVIDIA for Ken. NVIDIA has a mini potential double bottom. You're gapping up slightly today because of Broadcom. That's the only thing against the rotation zone also. Let me make sure I choose the right peak. That's why you got to look at all your different time frames. See how it looked right on the one time frame, but it's actually this peak on the 4 hour. So anything on NVIDIA, remember you have a gap left behind. From the long side, anything would be first key area would be 117.35 on a gap fill, and the key to trigger the double would be 119.31 against the rotation zone. So the first target becomes very significant, around 123.90. Now, again, this still favors breakdown plays unless that little bounce triggers. You have, it's negative on the weekly. You're in bear mode on the weekly. You're in bear mode on the daily. All right. So that's the only thing that would make it bull mode. I keep watching for coming into, if this breaks lower and does not trigger that double, I keep watching closer to this 103 area for some pretty key support. There's a very significant closing bar right there too. Broadcom, what I was talking about in here, let me just show you this setup. So The invalidation point for the double was going to be 177.08. Did not hit that. Going into earnings. Now this would have had to be traded. This would have had to been traded. You could not wait for the close. I'm just showing you something that if you're one of these intraday or trying to trade earnings, you can see the complete valid double running up, spiking just through the final target, and then collapsing back down. So that was completely valid, but now the raw up over 9% at one point is now turning into, we're collapsing back below to the target point. I mean, to the prior earnings report release. So that is over. Remember, also against the rotation zone. So it spiked up after hours into the daily rotation zone and now rotating back down. Again, it's still going to be up from yesterday's close, but it could not sustain its levels. So this is the kind of market we're in. Can I check crude oil 3-month chart? A 3-month chart. This, if you're looking on this pullback, that's not a huge bullish flag. That's just a pullback. This is not a huge bullish flag. Because of bullish flag has to be within a trending pattern. The trend has been making your bullish flag. It's not been in a trending pattern before this. It's been in major consolidation. If you want to hear more on that, go watch the Futures Edge that was live on Tuesday. Keep in mind, so it looks like the little mini double tops off and it hit the first target officially on the double. So this would be a stop raise. So what would now be the invalidation point on this? The furthest point away that would invalidate it is 66.20. And this is a bounce play only into the rotation zone. When I trade against the bounce, I use hourly and 4-hour. I mean, you can still have a setup on a daily, but I'll really monitor the hourly and the 4-hour. Sterling was using the peak of January 13th, 2025 on natty gas. The peak of January 3rd. You have this peak, and then this peak is way too high. So I'm not seeing the weekly. The daily is very clear. The weekly is not clear at all. So I only see a daily. If you're seeing something different, shoot me over a text with a screenshot, Sterling, because I'm not seeing it at all. No, might just be off with my eyesight today, but that's where we sit. So let's just see how the market opened. Let's just see. So again, the double bottom is potentially holding. Let's just see what a front run. I'm just curious to see if this holds because again, Friday we've been down all week. Front run area could be above 57.62, but again, has to be nimble. See what a tick is. Very flat tick opening. Very, very flat tick opening. See right here? Slightly negative, but not much. So, definitely not a lot of selling or buying pressure based off the opening range. So I'm going to be keeping an eye still on the bigger patterns. And also remember on the S&P, critical. Now, again, since we are getting an oversold condition and with cycles getting to the bottom on the weekly, I'd be watching for a bounce. But If we do bounce today, the weekly key close 58.09. If it closes above there, the double's been confirmed but not officially triggered. If we close below there, it's been officially triggered, and I'd be watching for rollover plays. More significantly, also, it looks like the rotation zone could be shifting to bearish mode on the weekly anyways. And the last time we had that little dip was back in October of 23, before we put in the massive %B buy. So keep that in mind too. This is the first time the weekly rotation zone could be shifting since the buys in November of 23. Very key levels are getting potentially broken. All right, with that, I hope everyone has a wonderful trading day and a fantastic weekend, and I will see you all next week. Remember, Powell is speaking at 12:30. So you can't just go to sleep after the European close. There could be volatility going in this afternoon. And depending on if Powell comes across dovish or anything else with rate cuts, you could see a Friday, a significant short covering rally going into the weekend. So just keep that in mind, and it all depends on what he says. And I have no insight into that. With that, I'll talk to everyone later. Bye for now.